What's up, everybody? It's your host of the Mint Tea Podcast, Wyatt Graves. And I just hung up the phone with Ryan Thomson. He's a GoBro. We had never met before, and I'm just so fired up and energized. This opportunity that this podcast presents to me and that I get to share with y'all is just really an incredible gift. It really is. What a great soul. You will hear my reference to his energy, and just the presence that he brought to the conversation was so great. And we talk about assumable mortgages. In today's interest rate climate, being 6 and 7% interest rates for buying homes, it makes homes unaffordable for many, many people. He has found and doubled down on a solution that helps people get interest rates in the 2%. In the 2%. It's from assuming loans that were originated back when rates were in the 2s and 3s and even 3s, 4s, or 5s, right? But nobody is talking about assuming loans because nobody knows how to do it. We talk about real estate brokerage. We talk about masterminds, all kind of great information. This is a really real estate specific episode, but he's just got great energy. I love it. So grateful to have this opportunity and invite you to come along and ride with me. So with that, let's get right into my conversation with Ryan Thomson. So welcome to the show, Ryan. You made a post inside of GoBundance that you were doing assumptions of loans. And that's always a hot topic for me in the real estate world. So I hit you up and I said, let's do this. And so here we are.
Here we are. Yeah, thanks for having me on.
I love it, man. So you're in Colorado.
Colorado, yeah. I'm located in Colorado Springs and work throughout the whole state of Colorado.
I love it. And so what got you started with assuming loans? Like, give me a background catch me up on how you got to where you're at.
Yeah. Well, how long of a story do you want? I mean, I can go back pretty far here.
I want the juicy stuff. I want the stuff that nobody really talks about. Give me some good juice on how you got here. Like,
all right,
was there?
I think I can give you some juice and keep it within a relatively acceptable time frame.
Okay.
I did social work for a long time after college, and I was running an urban garden and a wood shop, helping kids out of juvie, and I just kind of got burnt out and stumbled on financial freedom and real estate investing, and I bought a house hack, which is where you buy a home as a primary, put like 5% down, and rent out bedrooms or another unit or whatever. Converted a garage, rented out bedrooms, Airbnb that garage, 2x'd my mortgage. And I thought, this is pretty sweet. I'm going to get into this.
No doubt.
Done that 5 times now or something similar to it. And so I own 5 properties and 10 doors in Colorado Springs. And after that third one, I had transitioned to software sales, quit software sales, and went full-time real estate agent to help people do this. So I was leveraging my experience as a house hacker, a successful house hacker, to help other people do that, right? And help my clients walk them through, hold their hand through the whole process. In 2022, rates started going way up. And, since 2019 in Colorado Springs, prices have doubled. And then across the country, obviously, rates have tripled. And so it was really hard to scale house hacking. In order to scale, you needed a lease, right? That covered all of your mortgage in order to cancel out that debt on your DTI and then go buy another home with your, job income that more than likely hadn't increased that much. And so you really needed to cancel out that mortgage with the lease that would actually cover it. And that wasn't happening with prices and interest rates the way they were. And so I stumbled on assumable mortgages 3 years ago, and I thought, this is the solution, and this is going to come back with a vengeance. They were really popular in the 80s, but since the 80s, rates have been dropping. And so you can go get a new loan with a lower rate, so there's no reason to go through the hassle of assuming somebody's low rate. And so I pivoted from, I still do house hacking, still help house hackers, love working with them. There's a lot less of them now. And I've pivoted to assumptions as a way to help my house hackers. And then I realized, this is much bigger than just house hackers, right? This is primary home buyers that just want to live in a home. This is investors, This is house hackers. It makes homeownership affordable again, and it makes investing in single family. It makes the numbers work for investing in single family homes again. So that was the pivot, and it's been awesome. I haven't looked back.
That's so good, man. And you know what? I want to tell you, there is an air about you with social work in your blood. I don't know what it is, but I feel the energy just on this call. So it's really cool. I really appreciate that, which is why I'm calling that out.
Yeah, thanks, man. I appreciate that. Yeah, there's a core within me. There's a driving part that I like helping people, and I think I've found a really good way to do that in real estate to make homes affordable again for people by getting rates.
I don't know if we'll have time on this call, but we're going to reconnect because part of my big picture vision, I mean, the reason that my brokerage is called Kaizen Home Sales and Services is because I'm rooted in continuous improvement and growth and development and helping people get ahead. I really do think there is a day where we have to come together in America to help people through housing live the good life, because housing is so unaffordable right now for so many people. And when you have tight finances, then that causes all kind of other stress, mental health concerns, right? Which just start snowballing. So there's a bigger mission as a foundation underneath all the things that I'm doing. And my place in GoBundance is so that I can connect with people and figure this out about other members just like you, so that we can do it together. So This is awesome already.
Yeah, cool.
Okay. We established on the front end of the call that you're not doing subject to mortgages. You're doing full assumptions. And that's a big distinction right now. I've done sub to, I've done sale with mortgage, subject to mortgage. I've done full wraps. We're doing creative financing inside of my brokerage to help people sell houses and people to help them buy houses. We have never done an assumption. So tell me, what am I missing the boat? Maybe I should have done an assumption. Maybe I haven't found the right deal. So walk me through the nuances, literally, of an assumption and what it takes to assume a loan, because I really don't know.
Yeah. Yeah, I mean, it's an awesome tool to have. There's a lot of sellers that don't want to take the risk of the sub 2, right? And there's a lot of cover your ass paperwork that you've got to understand how it works in order to do the sub 2. And some sellers are cautious or nervous or totally, not willing to do that. And so assumptions is the lender is involved the whole way and transfers the loan from the seller to the buyer. And a lot more sellers are willing to do that. So it's going to open up some doors for you and your agents.
And the rate stays the same. I mean, that is the underlying benefit here. If a seller got a loan in 2020 for 2.67%, you're telling me that if the loan is assumable, that there is a chance, an opportunity for a buyer today to assume that loan at 2.67% interest.
Yeah. Let me answer what stays the same, and then I'll go a little higher level on like how all these work and break it down. But yeah, the seller transfers the loan to the buyer. Interest rate stays the same. The amount of years left on the loan stays the same, which is a really overlooked benefit because you got 3-4 years, whatever, that the sellers paid the highest interest years, and the loan balance transfers to your name. The monthly payment stays the same. So everything about that loan stays the same. It's just transferred from the seller's name to the buyer's name. So what we're looking for, to go high level, any FHA, and any VA loan are assumable. And so if the seller used the VA loan, which is for veterans, or an FHA loan, which is available to anybody, written in those loan documents is the ability for that seller to sell their home in the future and allow the buyer to assume their mortgage. So it's written in the loan documents. So whoever is servicing that loan has to do it. You will hear no's from the banks and servicers. You'll hear no's from listing agents. They do not have the power to do that. It is illegal for them to avoid it, and they will lose the ability to service VA and FHA loans. So it's a massive part of their business, and they're willing to do it. What happens is the seller still wants their equity. So let's say the purchase price is $400,000 on this home you want to buy, and the loan balance right? The home's appreciated over time. The loan's been paid down. The loan balance, let's say, is 380. And so the buyer would make an offer for 400. They'd bring the equity gap in cash, $20,000. And then the seller transfers the rest of this loan balance to the buyer. And it's fully in their name along with the title for the house.
Okay. So first question. And I have to assume maybe based on the timing of loans and this, that, and the other, that we probably, to get premium interest rates, the loan's not that old, right? It's probably in the last 4 or 5 years. So the equity is probably not that strong to then prohibit people from showing up with that much cash to bring to close that gap that you referenced. Is cash the only way that assuming loans works? Like, are we not doing a seller second for that? Bringing some cash, like it's either cash probably or nothing?
No, I just say cash to make it easy, but there's so many ways to make that work. And first of all, the equity gaps, I've seen some for zero, right? Maybe the home didn't appreciate that much, or maybe they really overpaid for the home when rates were low. Yep. I've seen equity gaps of a couple 100,000, right? People that have owned it for years and just refinanced when rates were low. So the gaps are all over the place. It can be covered with cash, a HELOC on another property, a gift. And you can actually get a piggyback second mortgage HELOC on the equity of the property you're closing on at the time of closing. So if it's going to be your primary and you put 5% down, then I have a lender that will actually come and loan you the rest of that equity gap. Which is
that's really, I think, key right there, because you cannot get a HELOC on a sub 2. I have not been able to successfully find a HELOC on a sub 2. Like our personal house, we sold it sub 2. Then we bought our new house sub 2 because the rate was great, right? We had the cash to close the gap, this, that, and the other. But the thing is, for our second house, we had to bring a lot of cash to the table because it had appreciated a lot. The buyers or the sellers had, a lot of equity, but their rate was like 3.5%.
Yeah.
And we wanted that rate more than we wanted the cash, right? Just because it was a forever home. And so we did it sub 2, thinking that I could just go back into a HELOC to access that cash that I brought to the table. 3, 4, 5 banks. I don't remember how many that we went through, but we couldn't do it because that first mortgage wasn't in our name. So the assumption is a big deal. That's a big distinction. I love that benefit. You didn't mention conventional. Is conventional loans not assumable?
They're not assumable.
They're not. So we're talking about FHA and VA.
Yep, which is about 25% of homes with mortgages.
Gotcha. And now, if you want to assume the loan, who do we call to start that process, and what's that underwriting process look like?
You call the Assumable guy. No, you need an agent, right, that understands like how this works, and so you want their help walking you through it, and then you write up. Your agent then would want to, or you, if you understand it, would want to call the listing agent and say, hey, there's your seller's got a VA FHA loan. I would love to make an offer, but I want to do an assumption. Are you familiar with that? Right. And a lot of times it takes educating the listing agents on how this.
For sure.
Sure, you understand that was sub 2, right? There's a lot of pushback and misunderstandings. And a lot of agents think I'm doing sub 2, right? Which is, the sub 2 guys, I feel for them. Like it's got to be even more difficult for the sub 2 guys to have that conversation. Like you got to be sharp and know how to educate people on that.
No doubt.
The same as with the assumptions. And so call the listing agent, educate them, write off an offer. There's a couple deadlines and nuances to an assumable offer. And then once you're under contract, you are immediately getting the seller's lender involved to start that assumption process. And when
we talk about the lender, we're talking about the servicer.
We're talking about the seller's, whoever's servicing the seller's mortgage.
So we just call the 800 number that's on the mortgage statement. It's literally that simple. We call them and say, hey, we want to assume this loan. And then they will appoint us to the right person and send us to the right, what's the right word I'm looking for? The right mailbox, the right extension to the right extension to find the person to do it?
Yeah, that's not what I do. So here's what I do. This process, and I'll give you a little background so it makes sense. The process of assumptions are super complicated, one. Two, the banks do not want to do them, right? They don't really get paid. There's no new loan origination fees.
Really?
Nope.
Okay.
Yeah, so it saves you by a little bit of closing costs.
Are we doing appraisals?
No appraisals because it's already backed by an appraisal. The loan's already backed by an appraisal. And the bank is not making, they don't have departments set up for this, right? Because they're not making any money. And the biggest reason, right, they've got, let's say $400,000 or $380,000 in our example, loaned out there at 2.5% interest rate. They would love for this assumption contract to fall through and it sell a traditional way and then reloan that money at 7% interest rate today.
No doubt.
So they're not incentivized to make it easy or to get it done, but they legally have to. So they drag their feet. So there's a couple businesses that have actually popped up that are assumption processors. And their whole job is to be an expert in the process of pushing assumptions through, what information to give the lenders, and like to have connections with all these banks and servicers. And so what we do when we get in a contract is we send the contract to these assumption processors, and then they get the ball rolling and they walk us through the whole process.
Are those assumption processors specific to Colorado or they work nationwide?
They're nationwide.
Oh, nice. Dude, that is fantastic. So give me some success stories. Tell me how tell me this. How are you getting involved with these? Are you doing these as a real estate agent and you're lead generating as the broker or the agent to just get paid as a broker and an agent? So you're looking for FHA and VA sellers to then offer that as an opportunity to help them sell their house. So that's your niche. Or are you doing this as an investor, a little bit of both? Tell me about that.
Yeah, all three. I mean, I'm hitting it from a couple different angles. One is I have 80 buyers that have signed agreements with me to like try and find these assumable deals. And I'm currently
hold on. We got to break this down. So you're lead generating for buyers who are interested in buying a house if they could get an interest rate sub 4%. So like that's your lead magnet?
That's my lead magnet. Yeah. And it just spreads like wildfires, right? Once you explain to somebody how it works, and then they go find, then they tell all their friends, and yeah, I'm the assumable guy. So like, that's how it started, right? Like you got to talk to Ryan. He's the assumable guy. So yeah, I mean, I'm drowning in work and starting to scale. I'm onboarding 3 agents. I'm trying to go to different markets, but the 3 angles we're working are: one, we want to find properties that are assumable with FHA, VA loans. And there's several ways we do that. And we put them in front of our buyer clients, right? That part's actually pretty easy. The second is, still on the first with buyers, we'll walk them through this complicated process, answer all their questions. We'll make it easy for them. This process is difficult. It's convoluted. Hardly anyone knows about it. It's been irrelevant for 40 years. The second angle is helping sellers sell their home in a slow market and potentially for a premium, because a smart buyer would pay a premium all day long
for a cheap interest rate. You're saving $12,000 easily a year, and you're saving hundreds of thousands over the life of the loan if they keep their property that long. And you're paying down 12 to 15K of principal a year instead of 5. And so the numbers for these folks are substantial.
It's substantial. And so sellers is the second one. And then third is investors. And so, I'm buying these properties myself. Haven't bought one yet myself, but I want to very soon. And I've helped dozens of investors now buy these. And so there's some of these assumables, not all of them are assumable to investors. And that's actually one of the most valuable things that we're providing, is all of the groundwork to go out, educate listing agents, talk to them, and see, will your seller let an investor assume the loan? If the answer is yes, then they can. And so, success story, which one to talk about? Had an investor put down a $420,000 property. The investor put down $16,000 was the equity gap, and they got a 2.75% interest rate.
Wow.
They're going to lose $600 a month in cash flow. But they are seeing that as reinvesting it in the property because they're paying $15K of principal down a year. So if that home doesn't even appreciate, they are almost getting their money back every year until they sell it with just principal pay down. And then if it appreciates,
that's a very, very creative financing or investment vehicle. Very creative. So there's $600 a month, right? $7,200 a year, but they're getting $15,000 worth of principal pay down. They're banking on at least the market value staying flat and or appreciating long term.
Yeah. Yeah.
So instead of putting the money in a life insurance policy or an investment account, they're putting it into a piece of real estate. That's pretty wild. Hey guys, if you've been a listener of my show for any length of time, you know that I attribute a lot of my growth to learning from the guys inside of GoBundance. If you think that GoBundance is a tribe that you might be interested in joining, then reach out to me. Go to wyattgraves.com, connect with me. I'll reach out personally with you and answer any questions about GoBundance to see if it's the right fit for you. What makes a loan assumable for an investor? Is that just VA or that's...
Yeah, FHA, you got to move into it within 60 days. VA can be assumed by an investor if the seller is willing to leave their entitlement. So we make it super clear to the veteran sellers, like if you let an investor assume, you're leaving your entitlement. And there is a lot of VA sellers that are willing to do that for any number of reasons. They might have a spouse that's also a veteran that's got entitlement. They use so little entitlement on this house that they can actually go fully use their VA loan and put zero down on the next house, right? There's a way to use your entitlement more than once as a veteran. They just really want to sell their home. They're doing really well, so they're going to go put 20% down a conventional loan instead of 0% down VA loan. So we find about 10% of veterans are willing to do that once we educate them on all the consequences of letting an investor assume it.
Got it. So next question in my mind is racing with all these questions. To find the sellers, is there a database that's local that you can find, like scrubbing the clerk of court's records that show us if it's an FHA or a VA loan that allows you to then market to those sellers? Yeah.
So all of the loan information, FHA, VA, is public info. So I have a list of all of that in the counties, in some different counties for Colorado. And I am trying to market to those sellers. And then there's a couple great websites, theassumableguy.com being one of them, where you can actually, it pulls all of the VA and FHA info, and then it takes anything that's on the market. And if a property is on both of those lists, puts it on a map and has all the loan details.
Dude, this is friggin' genius. I just love it. And you are the Assumable Guy. This is your website, right?
That's my website. Yep.
And so is that free or we pay for that?
Surely
we have to pay for it.
You have to put in your email and your name. That's all you got to do to get that. And then you get free resources from me along with property.
And that will work no matter what county?
It's not in every market in the U.S. It's not in every market in Colorado, but it's got a handful, a good amount.
Okay,
so,
all right. And if it's not on there and we want it, can we ask for it and then you figure out how to make that happen?
You can, yeah. That's not like a current part of my business, but I am trying to scale to other markets. So, but really, what I'm trying to scale to the ones that are on the website first before I make new ones.
So at the end of the day, tell me about your business model. How can I help you? If my listeners are interested in this, what resource can they count on you to provide outside of that service we just mentioned?
Yeah, I mean, I am the Assumable Guy. I'm expert in all things assumable. So if you want, if you have questions on how they work, right? Happy to answer those, or you might be able to find those answers on my website. You could sign up for my email newsletter on Assumable Guy, and I can send you resources weekly on how they work. If you're an agent that business is slow and you really would like to get into assumable mortgages, right? I'm trying to scale to different markets and have agents in different markets and lead gen there. So that could be a way I can help. If you're an investor and you want a really good return on your investment by being leveraged in real estate, putting less than 20% down, often less than 10% down, and getting rates in the 2s or 3s, breaking even or losing some money on cash flow, but paying down a ton of principal and getting a great return, right? I can help you find those properties. I don't know. There's a lot of things I can do.
No doubt.
Were you fishing for something with that question, or is there?
Well, I want to make sure that I can send people to you that you want to get to you, right? There's people that are going to hear this and say, and if you're scaling a business, I want to connect y'all. So just giving my listeners a clear path to get to you for your intended purpose, right? So the assumableguy.com is your website?
Assumableguy.com is the website. Yeah, if you put your info in there, then I'll someone on the team will for sure reach out and we'll connect.
All right. So let's brainstorm. Well, I have one other question that I want to ask before I move on to this. What's the typical time frame from start to finish on closing this?
Yeah, 45 to 90 days. Okay. So if a typical closing is 30, you're looking at 45 to 90 days.
Got it. Cool. Okay. So moving on and just kind of riffing a little bit about real estate agents and brokerages. Are you your own broker or are you brokered under another name?
I am under Keller Williams out of Denver, and but I have my own team under that.
Gotcha. So let me tell you what I'm doing. And this is also a plug to the listeners who are interested. So I have created a mastermind brokerage. And I love to teach. Of course, I love the podcast. I love connecting with people like you to have these conversations with people, to expose people to other options. So think about GoBundance, right? You have to have a net worth. It's just for guys. But there's a lot of people that don't have the net worth requirement to get into GoBundance. And they're also maybe local and they're female as well. So I have found in my desire to teach and connect and put people together that there's a great need for these kind of, this demographic, if you will, especially in the real estate space. And so I have created my own version that I call Ascend. And it's for people that don't have the net worth, that are business owners, real estate agents, real estate investors. And we come together and we teach, we connect, we do workshops, and we're planting these chapters, if you will, across right now, South Louisiana. The fee is $6,000 a year. Okay. Nice. So $500 a month.
Yeah.
And then over at my brokerage, which is Kaizen Home Sales and Services, it's a cap model, and the cap per year is $6,000. The next year after you cap, the next year it's $4,000, and the third year and every year thereafter, it's only $2,000. That's the same membership fee for Ascend. So for my real estate agents, you can pay your cap by joining Ascend, and everything you sell is 100% yours.
Oh, nice. Cool.
Isn't that great?
Yeah.
So my goal is to scale the brokerage across the country and plant teams, divisions, right, of people that want to participate in a mastermind kind of environment where we teach, we push, we stretch, we hold each other accountable, and we're talking about real estate investments, especially with creative financing, so that agents can actually grow retirement and passive income and not have to sell houses forever and still have a paycheck. So if you ever get the itch, right? If you ever get the itch, I'd love to consider planting this model in Colorado Springs.
Okay. All right. I'm
cool.
I'm open to conversations that can work.
I love it, man. I love it. Are there questions that people ask that I did not ask? I think it's pretty black and white, pretty self-explanatory, but are there things that we need to talk about to help other people maybe take this leap and consider doing an assumable mortgage?
I don't think that we didn't. We answered a lot of the big frequently asked questions. I would say the thing to really drive home to folks is if you think you don't qualify for a home, or you really want to you're a move up buyer, right? You need more home, but you're like, man, I don't want to go get a 7% interest rate and triple my payment just to have more room for my family. doing the assumable mortgage like makes that payment affordable again.
Dude, this is such a great conversation. I mean, the lower interest rate, because the buyer or borrower has to qualify. That they're going to underwrite the borrower. They're going to look at check stubs, income, tax returns, and all that.
Right.
But they have to qualify with the current loan terms, which at a 2.5 or 3.5 or even 4% interest rate allows you to afford much more house with the same pay.
Exactly.
So you're actually finding a lot bigger buyer pool.
Yeah, I mean, it makes homeownership affordable again, right? We're Marty McFlying the rates. We're going back to 2020, grabbing a rate, and then coming back to the future and bringing those rates with us. So, yeah, if you can afford a $2,500 monthly payment, and I'm just pulling this out of my hat, but that's what, say, $350,000, $400,000 home today. But if you got a 2.5% interest rate, that's a $500,000 or $600,000 home that you can now afford for your family.
Yeah, so good. That's so good. That's so good. This has been awesome, man. Let's transition for closing real quick. Tell me about your GoBundance experience. How long have you been in, and what's it done for you?
Yeah, I've only been in since April. So
you're new.
4 months, 3 months.
Awesome. How'd you find out about it?
I don't even know. I had a goal this year to join a mastermind, right? I decided that I can go. I'm pretty happy with the success that I've done on my own right now, but I realized I can go further, faster, and have more fun if I was around other people doing it. So that's why I joined. And yeah, the GoPod's been great, right? They've already challenged me with some good things and encouraged me. Like, dude, you got 80 buyers interested. You're drowning. Like, you need salespeople. And so that was a good push to start trying to onboard some agents and expand that way. I mean, just connecting with people like you that are doing big things in real estate and other investing opportunities. It's expanding my mind around like what's possible and, you know, what's good out there.
Let me share with you something that's currently under contract for me right now to really expand your horizon on what's possible.
All right, let's hear it.
In 45 days, I am under contract to close on a $14 million property.
Sweet.
For $9 million. And at closing, and this is the disclosure, right? It's not a done deal until it's a done deal. But if it all works, right?
Sure.
I'll walk away from closing with $1 million cash because I'll get a loan for $10 million. I'm paying the seller $9 million, and it appraises for $14 million.
The lender let you do that?
Creative financing, babe. It's like an assumption of a loan.
It's
a cash out refi. It's very creative. So far, everything is checked out with everybody that we're working. We're in the deal, and it's all working out. It's wild. It hasn't closed yet. That's the disclosure.
Yeah,
that's the disclosure.
Exciting,
but the pathway here has come from a GoBro. The deal came from a GoBro. And it will cash flow from day one close to $300,000 a year.
Wow.
Isn't that crazy?
Yeah.
I mean, so for me, I went from 0 to 48 to 72 to 125 doors in a matter of 2.5 years. And now I'm going from 100, which I have units under construction. So once everything is built out, it will be 175 doors. But I'm going from 175 plus 280. So in one big swoop. So like I'm putting them out there, man. And we're going to take the jump and see what happens. But
that's
GoBundance
awesome.
GoBundance in terms of expanding my horizon on what's possible. Crazy.
Yeah.
Are you going to Banff?
That's cool. I'm still, not as of right now. My summer is out of control. I'm gone like every weekend doing something. So I want to make it, but I have not committed yet.
Well, the good news for you is that you've got a little more time. So we were down to 4 spots left. and they just expanded the capacity. I don't know if they got another room or got a bigger room or whatever, and they added another 10 or 15 spots. So you probably got another 2 weeks to commit, man. It's included in your membership. It's free.
All right.
All you got to do is get there.
All right. Cool.
All right. That's my push. GoBro to GoBro. Come jump in and meet 300 other GoBros.
Yep. Maybe
in Banff at that.
Maybe get a 30 unit under contract while we're there.
That's what I'm talking about. There'll be deal flow for sure.
Sweet.
Dude, this has been awesome. I want to follow up. I'm going to make a note to make sure that we connect. I love the social work path. Like my goal is 25,000 doors, holding company of service-based businesses surrounded by a protective moat of personal growth and development community. So my mind is right. We get renters and residents that move into our units. We start asking them qualifying questions about their quality of life. And then we get them plugged in with our mastermind, with our online education and the community and the culture that we have inside of my world. And we start helping them with financial awareness, financial wellness, budgeting, job search, right? Things of that nature through the housing route. And obviously, if my property managers and my staff are trained and equipped with those conversations, then we get a direct access, right, to those folks to ask them when we show up for a maintenance job or a maintenance request, or they're behind on their note. Instead of just saying, hey, you're behind, pay or leave, we can ask, why are you behind? And how can we help you get caught up? And do you need budget help? And really provide it's crazy that we're having this conversation. I want a property manager that has social work background. That's what I'm shooting for. And that's what's on the horizon. So I want to stay connected for sure. Yeah.
Let's do that. That's inspiring. I mean, I'm all in and helping people leverage real estate and home ownership and good financial decisions to change their life. Right. So that'd be exciting.
I love it. You got my cell phone number, man, I think. And if not, I'll send you a text. I know that Tabitha helped get us coordinated, but I'll shoot you a text so that you have it. If I can do anything for you, let me know.
Yeah, cool. Thanks, Wyatt. Really good connecting with you, man. Appreciate it.
Same. Appreciate it, man. All right, Ryan, I'll talk to you later. Hey, guys, Wyatt Graves here. As you know from previous episodes of this show, I'm on a mission to grow a business that has 25,000 doors, a holding company of service-based businesses surrounded by a protective moat of a personal growth and development educational company. With that being said, I am looking for deals, I'm looking for talent, and I'm looking for capital. If you're interested in connecting with me, go to my website, wyattgraves.com. Send us a deal. I will be sure to include you in some way, shape, or form. Whether you're a real estate agent and you want to be my agent, you're welcome to be my agent if you bring the deal to me. If you're not my agent and you bring the deal to me, we will still get you paid somehow, some way. If you want to work inside of our world, then drop me a line, send me an email, connect with me. We're interested in attracting level 5 talent. And then finally, if you are an investor and want to invest your money, not only to get double-digit returns, but also to have real impact inside of the communities as we raise up the level of good life living throughout our properties with our residents, with our employees, with our communities, then I want to connect with you. Go to wyattgraves.com and fill out the contact information, and I will personally be in touch with you so that we can figure out how we can shake the trees together and win together. wyattgraves.com.